BBC World News, the latest business news from across the globe. World Business Report.
The world's second largest economy sets its sights on a slowdown. China lowers its growth targets as it emerges from its extended COVID lockdowns. And the Credit Suisse crisis deepens. The biggest shareholder in the scandal-hit Swiss bank dumps its stake. So what next for the former giant of Swiss banking? Hello, welcome along. This is World Business Report. I'm Ben Thompson. Now we start in China, the world's second largest economy, because it's set out its economic forecast for the year ahead. Well, the country has set pretty modest targets for economic growth this year. They've come in at around 5%. That's as it kicked off the annual session of its National People's Congress. That is poised to implement the biggest government shake-up in a decade. Well, last year, successive strict lockdowns slowed growth in China. Official figures showed that the world's second largest economy grew by 3% last year, which was way below the government target of 5.5%. It was also its slowest in decades. Well, let's speak to Janet Mew, who is head of market analysis at Brewin Dolphin. Janet, good to see you. Talk to me about this slowdown, because it's the sort of figure that most developed economies would love to have right now, but a slowdown to 5% marks quite a shift in China's economic outlook.
Hi, good morning. Thanks for having me. Yeah, I think economists were pretty disappointed at this conservative growth forecast. As you mentioned, it is actually a high figure for the developed market, but China is still an emerging market that should be growing strongly. So this is slower than expected, because I think in the previous year, the government has missed its GDP growth target, and I don't think that they want to repeat the same mistake. So I think by setting up a relatively conservative growth forecast of 5%, it makes it easier for them to beat it this year, especially with the reopening of the economy.
Most economies around the world are facing some pretty strong headwinds right now. We know that many economies in the West are facing a recession or are very close to one. What is it that is weighing on China's outlook?
Yeah, as you mentioned, the external economic environment is important, given that China growth depends on trade. So if the Western economy is slowing, then obviously the demand for Chinese goods will be slowing, which affects their export. And in fact, we do see a weakening in the China export numbers. But I think the key for this year for China is domestic economic growth, which is driven by domestic consumption. And I think that would be a good story because of the ending of the strict COVID-0 strategy. We already see data showing that the traffic in China has picked up. There is starting to see congestion on the road. So these are all positive signs that people are going out and about. So the key thing is domestic economy. The headwinds would still be whether the confidence is returning as people anticipated, and the youth unemployment is still pretty high. It's at almost 17%. So the government will need to address that.
We've been very used to strong growth figures from China. They have kept the world economy ticking over. Are those sort of figures, often double-digit figures, are they now a thing of the past?
Yes, I think the consensus is that it is a thing of the past, because the very strong growth, double-digit growth that China has experienced over the past decade is driven by several factors. First of all, is globalization, which means improving trade relations. But we are seeing actually that is going backward. We're seeing more trade restrictions, more trade tariffs, and intensifying US-China tension. And secondly is the favorable demographics, meaning that there are more and more working age population. But again, that is going in decline. We're seeing the first decline in the working age population in China. So, and other is the China used to rely a lot on the infrastructure spending, building houses, etc. But again, the key for China nowadays is domestic consumption, is boosting spending by people. So again, all these strong growth driver is going in reverse in the next decade or so. So I think we shouldn't expect the kind of double-digit growth from China anymore.
One we'll keep a close eye on. Janet, for now, thanks so much. Janet Muir there at Brewin Dolphin. And now we're going to stay with Asia because Foxconn, which is the maker of Apple's iPhones, has said it could create 100,000 jobs in India after announcing plans to shift production out of China. On Friday, the southern Indian state of Karnataka said that Foxconn had announced a major deal there. Well, that follows supply chain disruption last year that led to shortages. That all caused by China's strict COVID lockdowns. Well, our India business correspondent, Arunadhay Mukherjee, has the details.
Well, the Foxconn chairman was in India last week and he met the Indian Prime Minister as well as several other senior political leaders discussing prospects for the company here in the country. And there were also reports that Foxconn was considering investing nearly $700 million in India. But a statement came in from Foxconn over the weekend in which they said that they didn't have anything binding or definitive yet as far as new investments were concerned. But they did say that internal negotiations and inquiries were on we did, however, get a confirmation of sorts from one of the big state leaders in India, the state of Karnataka's head, the chief minister, putting out a tweet on Friday saying that they had allocated and earmarked a massive plot of land for Foxconn next to the airport in Bengaluru city and also said that this entire plan is likely to generate nearly 100,000 jobs. So that was one significant aspect that we did get to know. But Foxconn has been looking to increase its footprint here in the country. It already manufactures iPhones in the southern Indian state of Tamil Nadu, and it's looking to increase its footprint because Apple at the moment in India only has a market share of just about 4%. But Chinese smartphones, which are more affordable, have been dominating the Indian market. So this is being seen as yet another attempt to try and increase its entire reach here in the country.
Now, there is more bad news for Credit Suisse. One of the bank's biggest shareholders, that's Harris Associates, has sold its entire stake in the Swiss bank. Well, the fund held a 10% stake in August, which it reduced actually to 5% in January. It's now offloaded that entirely. Well, the head of the fund has told the Financial Times they're worried about the future of the firm. It leaves the Saudi National Bank as the largest shareholder in Credit Suisse. Let's get the thoughts now of Sunaina Sinha-Haldea, who is Global Head of Private Capital at Raymond James. Thank you for being with us. And just remind us the background to this story. It's fascinating, the fall of a giant, and then the headlines today don't make for any welcome news for Credit Suisse.
Good morning. Thank you for having me. And yes, and this is yet another headline that doesn't make for welcome reading for Credit Suisse. It's almost death by 1,000 cuts, if you will. In the case of Credit Suisse, they certainly hope that that's not the outcome. The background here is simply that Harris Associates has been one of the biggest backers of Credit Suisse for many years. They held the stock, they sold it, they bought back again, and they've been in it for several years. And were in it all throughout the last year when the turmoil and the bad news kept building. It's ultimately a signal that there are better sectoral buys elsewhere. Their money is mobile, and if they don't believe in the restructuring plan, which they've been clear that they do not, then there are other places, especially in the banking and private wealth sector, where the higher interest rates are helping other businesses perform while Credit Suisse continues to lose money.
What happens next for Credit Suisse? We know they've been trying to make moves to shore up their financial position, but I wonder what a move like this does to the future outlook for the bank.
From a future perspective, this is an investor confidence issue. Will other investors in the Credit Suisse shareholder base react similarly now? Is this the first of many straws to drop? That's the big question. Remains to be seen. It is very much do or die for Credit Suisse. They're in this radical restructuring plan where they're spinning off the investment bank into the new First Boston. Remains to be seen whether that can be a successful spin out or not. Harris and Associates, in one of their interviews overnight, mentioned that they thought that it was far too costly the way that restructuring was playing out. The other key issue is, of course, they're selling a bunch of their securitization assets to Apollo. Whether the proceeds of that sale are going to be enough or not, and whether they can indeed reignite their private wealth base. There's been huge outflows from their private wealth customer base in the last 3 months of 2022. Can they stem the losses or not?
Sunaina, good to have your thoughts. Thank you for being with us there from Raymond James. Appreciate your time today. Just time to tell you a couple of other business stories. Starbucks is to open 100 new stores across the UK this year and invest millions upgrading its existing cafes. That comes as the world's largest coffee chain reports a big jump in sales for the UK in 2022. That's as it recovers from the pandemic. At the end of last year, the company had 1,066 stores in the UK. It's the largest outside of America. Much more on all those stories on the business pages of the BBC News website. I'm on Twitter at BBC Ben Thompson. We'll see you very soon. Bye-bye.
Thanks for being with us on BBC News. Insiders at the social media giant Twitter have told BBC's